Hello everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about the new cosigner release form that's actually been out for a while, but it hasn't been that promoted with all of the student loan lenders, the major student loan lenders. Of course, many of you have taken out student loans with, at the beginning it was Sallie Mae, or of course, that ended up being bought out by U.S. Department of Education, Direct Loans, Navigate, Nelnet, you name it. But a good portion of you all, whether you guys had a cosigner or not, may have had private student loans, maybe with directly with the school or from SunTrust Bank, Wells Fargo. There's so many different student loan providers. I mean, you name it, I've seen it honestly. So, but I say that to say, many of you probably have had a cosigner, okay? Now, this is a little bit different because normally when you have a cosigner, they can't get off that loan unless there is a newly reconstructed loan through refinancing. Now, refinancing is still an option. So let's just jump straight into it because I kind of explained half of it already. So there's two ways to actually get a cosigner off of a student loan. And of course, one is the traditional way that we know of, refinancing, just like you could with, a mortgage. I know I see that a lot. Sometimes the woman qualifies and their spouse or significant other or whatever, they don't qualify, or vice versa. The husband or boyfriend, the man, he qualifies, or whatever the relationship is, right? One person qualifies, the other one doesn't at the beginning of the mortgage process or the auto loan process, right? And traditionally, people would just refinance to get that person off of the loan. That's normally how it works in an auto loan. In a mortgage, usually you want to have that person come on board, so they can get the benefits of it with their credit as well. Okay, but with student loans, they have what they call a cosigner release form. So how the process works is real simple. Just like they're making the payments on it, they have to, of course, wait till they're actually making payments on it, it not being in deferment. So they have to make consecutive payments on time. Now, depending on the lender, that's going to range from 1 year to 4 years of consecutive payments on time. That's number one, is payment history. Number two is going to be income, making sure that that person can continue to make those payments on time without the cosigner, essentially meaning that the individual who has the student loans, that their income qualifies, that they can actually handle it themselves, okay? Because banks never really know who's paying them per se, where the money's coming from. They know who's paying them, but they don't know if it's money going into a collective pot, like when you have like a relationship versus, let's say, a sister and brother. That's not really going into the same pot. They just co-sign for each other as, hey, listen, if they're not paying, I'll have their back type of deal, right? Or of course, if they're not paying, they say, hey, listen, don't blow my phone up, come looking for the car. Well, with student loans, you would have to be flexible, mainly because there is no collateral, there is no house to take, there's no car to take, right? So with student loans, they really don't have a choice but to try to make it more flexible. So that's one thing, of course, is payment history. Number two is income, and number three, you better believe it, credit score. You have to qualify. We're talking high sixes, so 650 or higher, 670, 680 or higher. But again, it's going to depend on the private student loan lender that you went through, if it's still with that private company. A lot of things have been transferred over, just like I remember I had a client, they had a Parent Plus loan, and that was a cosign loan. So now that that student is now out of school, working, things of that sort, got the income requirements, you most definitely get that cosigner off, because sometimes there is a forbearance period where some people forget to make the payments on the student loan, and that will actually hurt the other person's credit score if they're paying attention to it. So, but either way, it never hurts to ask, if you do have someone that co-sign on a loan, just call the lender and say, hey, listen, when can I get them off of this? They don't have to be on there. It's not like an auto loan or a mortgage loan. So you do have those options. So hopefully that was helpful. If you guys like this video, like it. Of course, be sure to share it if you know anyone that's going through that situation. And as always, be sure to subscribe, as we got nothing but great content on the way. Thank you guys so much. Have a great day.